Hello, everybody. My name is Graham Elwood, and you are watching the Political Vigilante, now with more Bitcoin. We've had the halving. We had that in April. We hit an all-time high before the halving of about 73,000. And we've had a couple of little pullbacks in that time. Currently, the price is just under, at the time of this recording, it's 68,800, just under 69,000. We've tickled 70,000. But a lot of things are pouring into it. And as I've always said on this show, but I've been talking about Bitcoin for about 4 years on the show, it's really the institutional money is going to drive it. And institutional money can also make the price in the short run go up and down. But in the long run, Bitcoin is just going to continue to go up. And more institutional money will come in. We're going to talk a little bit later how pensions are coming in. The Wisconsin Pension Fund is coming in, which is one of the biggest and well-run pensions in the United States. But I like following and hearing from people who are like in the tech and the finance space and why their reasons tend to make a lot of sense. And then I've also noticed the people that always criticize Bitcoin never really understand it. It's fascinating. It's like, I don't really understand Bitcoin, so I'm going to just say it's dumb. But here's someone who thinks Bitcoin is going to be go to 500,000 a coin by October of 2025, which is what, 18 months from now? Let's listen to his reasons.
And so I was really curious. And so I had a guy on my team, Quentin, put this together. So Nick, let's go to the first page. So why is this interesting? So here's a little Bitcoin price analysis for you guys. So there's been a couple of halving cycles that have happened. And I asked him to go back and look at the price performance 1 month after a halving, 3 months, 6 months, 9 months, 12 months, and 18 months after a halving. What you notice is that there are these moments initially where essentially when you go through a Bitcoin halving, people are sort of reassessing what's happening and they're trying to figure it out. That's sort of what I would say happens in the first month and roughly what also happens in the first 3 months. But then within 6 months to a year and 18 months of these things, there are these crazy price appreciation cycles. 18 months after the first halving, the Bitcoin price returned 45x. After the second halving, it returned almost 28x. And after this third halving, it returned almost an 8x. And so if you graph that, this is what it starts to show, which is what is this price performance after each of these halving cycles. Theoretically, if history is a guide, we should see some price appreciation. Obviously, the other thing that's happened is we've commercialized Bitcoin. And we talked about this sort of as my big prediction for 2024, which is these ETFs are really going to allow Bitcoin to cross the chasm and have its sort of central key moment. And so if you apply the averages, and again, these are just averages, they're by no means predictions. Okay, so I just want to qualify that.
Yeah, this is not financial advice.
It's not financial advice. These are just guesses. Data. We took these and we applied it to the price of Bitcoin. And if you go to the next page, you start to see what could happen if you just take the average of the last few cycles. So because the first cycle was so extreme, and you start to
so you're just doing cycle 2 and 3 here to be clear.
Just the averages of cycle 2 and 3, and what you start to see is some really meaningful appreciation. There are a lot of countries that will never look at Bitcoin credibly, even if they support it. The US may be one of those. But there is an increasing body of countries that will become dual currency. And they will look at their local currency, and then they will look at Bitcoin. And they will say both of these two things are needed. One, when you're transacting on a daily basis for random goods and services. And two, when you need to buy a permanent asset that needs to have residual value, you'll use something like BTC. And I think that's a very powerful concept. And if you look at what this price chart could indicate, is that if this thing starts to get to these levels of appreciation, it is going to completely replace gold and start to become something that has transactional utility for hard assets. And I think if you marry that with this worry that some folks have about dollar debasement, you start to see some really interesting opportunities. So I just thought that this was an interesting thing that he here's our disclaimer, interesting thing that he put me on. I thought I'd share that with you. I'll publish this on Twitter, but that's your crypto corner for the year, folks.
So that is something we've talked about on the show before. If you go to historical price patterns, that's what it could do. So just the 12 months, but he's talking about 18 months. If you go 12 months after the last halving, Bitcoin did an 8x. So we were at about 65,000 at the last halving. So if we did an 8x from that, right? That's roughly 500,000, right? If we just bring it up on a calculator right now. 65,000 times 8 equals 520. That's an 8x. That's 520. So that's what he's saying. And he's bringing in all these other factors into it as well, which is if the dollar goes down and people move their money into Bitcoin because the dollar goes bad, right? That could very severely impact the price upwards in a very positive manner. First, you've got the ETFs, and the ETFs are, you know, as I've said on the show, it's an inferior product. If you're going to own Bitcoin, just buy Bitcoin and put it on a cold wallet, and then you're set. But the ETF does bring in a lot of institutional money because there's billions of dollars in assets under management by these hedge funds and these investment groups where their clients say, I want to get into Bitcoin, but I don't want to have it be too risky. So all we'll do is ETF. We'll take 5% of your portfolio and we'll put it in. And let's say these are people with 6- and 7-figure portfolios. You can start to see how that adds up. And that's what happened. The ETF got approved in January, and then the price started going up. And then the price pulls back a little bit, and then the people panic, and you know, those are the people that, you know, always pull out when a price goes down rather than wait until it goes up to. I don't understand that. If the dollar starts losing value, and we've talked about it on this show as well, we could have a bank crisis. We could have any number of those things. I think the Bitcoin price would pull back in the short run a little bit, and then everyone would pour into it for safety. Like if there's some type of black swan event, like what happened when the world was shut down 4 years ago because of COVID, and the price went from 9,000 down to below, it was like 3,500 or 3,800 or something like that. And then a year later, it hit an all-time high of 69,000. So let's look at one of the other things that is contributing to, I think, more institutional money. This was from PBS, okay? Michael Saylor put this out on his Twitter. So let's start this again. Give you guys full screen. This is from PBS NewsHour in Wisconsin. Okay.
The Wisconsin Pension Fund, ranked as one of the most fiscally sound in the nation, took bold action this year. It invested in Bitcoin. Most all government workers are part of the employee trust fund that pays out retirement benefits. But for a pension fund widely known for being stable, prudent, and smart with investments, is this a departure or right on brand? Our next guest says it's certainly turning heads. We should note PBS Wisconsin employees are participants in the Wisconsin retirement system. We are joined by David Krause, Marquette University Emeritus Associate Professor of Finance. And thanks very much for being here.
Yes, thank you.
So what is the reaction within the kind of investment industry to this news?
The investment industry is pretty amazed that a pension fund this early in the introduction of the Bitcoin ETF came on board. They expected it might take several years before there would be institutional involvement with Bitcoin investing.
So Bitcoin ETF is different and apart from the kind of Bitcoins that folks might have in their digital wallets?
Yeah, that's right. It was January of this year that the spot Bitcoin ETF was approved by the SEC. That allowed investors like the university systems or SWIB in this case, the Wisconsin Investment Board, to buy directly these securities that are regulated by the SEC, highly liquid, and traded on exchanges.
Still, was it a surprise to you to see that?
It was, but Wisconsin's investment board has always been innovative. This is a fully funded pension fund. Mm-hmm. So in a way, they have the luxury of being able to invest for the long term. They don't need to worry as much about liquidity as, say, the pension fund.
So I just want to point out real quick, when he says this is a fully funded pension fund, that's a very significant piece of information, because a lot of pension funds, we've seen this happen, they gamble and they don't have the money to pay out. This could be a huge issue. There's literally called the pension bubble that's out there. These big pension funds, state, municipal, whatever, big industry-wide pension funds, and they don't have the money to pay out the pensions. That's a problem when they gamble. So the fact that the state of Wisconsin, so what this Wisconsin pension fund is all state employees in the state of Wisconsin. That's all, anybody that works in government, anyone that's public school, the public broadcasting. So this is huge. And it has a track record, the state of Wisconsin, of being managed quite well, being financially prudent, and has the money. If everybody decided to retire today, they could pay it out, is basically what he's saying. So this is significant, that this wasn't some sort of last ditch effort, gamble, craziness to put Bitcoin in there.
Of Illinois, which is only funded at 50% of its level.
So should it cause pensioners, though, or workers to worry given the volatility of Bitcoin?
A lot of assets are volatile. I mean, if you really were to look deep down into the portfolio, you would see that a lot of assets, including some stocks, as well as some other alternative investments, are quite volatile in nature. Bitcoin has moved around a lot, but supply and demand are starting to balance out. And I do think the investment community is beginning to understand this more as a viable alternative investment.
So how much are they putting into Bitcoin compared to the fund itself?
Compared to the fund itself, it's just a toe in the water. It's 0.1%. Now, $180 million is not pocket change, but this is a $180 billion fund. I think it's just an entry point. I think they're testing to see the reaction of the public to whether or not there's resistance to owning this, and they're using it as a trial run. Because it really is not going to impact the portfolio substantially until you get to maybe a 1 or 2% positioning.
Because I was going to ask you.
So again, this is another point here to kind of go on the tail of the Bitcoin could potentially get to 500,000. So they have a $180 billion pension fund, and they just put 1% of it in there to the tune of $180 million. That's a significant amount of money, but $180 million is a lot of money, but it is only 1% of this portfolio. So this is why when we have these conversations, when I was in El Salvador and talking to Max Kaiser about this, and he would always bring up all of the assets throughout the world, the $4 trillion in assets that the entire world, you add up every pension and every stock portfolio and all that stuff, there's roughly $4 trillion. And right now, Bitcoin has about 1.4 trillion of that, maybe somewhere in there, 1.3, 1.4 trillion. So if it just goes to if 1%, do you see how significant this is? Do you see how 500,000 is not that far away? If every pension, not every, but even just more pensions put in 1% into Bitcoin, what that will do to the price? And again, there's only 21 million Bitcoin that will ever be mined. If Bitcoin just gets 1% of the total assets of planet Earth, so it goes from 1.3, 1.4 trillion to 4 trillion, right? That's a 3x right there. Gold is 14 trillion of the 400 trillion. What if it overtakes gold? which is what they said in the last video. What if it just gets another 1% of gold? Like, you see how this can start to add up? This is very significant. 1% of a portfolio is not a lot of money, but if everybody puts 1% of their portfolio into Bitcoin, the price will go up significantly.
What does your expertise tell you about whether this is a good investment for the pension fund?
Well, it's a good investment in the sense that it's going to add diversification. Mm-hmm. The objective of a portfolio manager or a fund is to maximize return while minimizing risk. Bitcoin, like other alternative investments, does not move in parallel with stocks and bonds. So therefore, it adds nice diversification effect. The potential upside returns are high, like as it could be with any new technology. Mm-hmm. And finally, because this is a currency with a limited supply, it actually can serve as an inflation hedge. I don't think very many people talk about the potential for it to remove volatility of government actions.
Do you expect other states to follow suit, watch this closely and follow?
Oh, I do. I do. Now, I don't expect those that are underfunded can afford to do that, because this is a long play. I mean, the state of Wisconsin can afford to go through maybe several cycles. I think the long-term trend of this type of assets is going to be upward slope, but there's going to be dips, there's going to be peaks. But if you're a pension fund with low liquidity, you really can't afford long plays.
Do you feel like Wisconsin's investment in Bitcoin legitimizes it?
It does. The day that it was announced, that's when the SEC 13F form became available to the public. That day, Bitcoin went up 1%. Now, is it solely attributable to the fact that an institutional investor bought those? I think so. So I think the market did pay attention to that. And I would not be surprised to see other institutional investors move into this asset category.
David Krause.
Isn't that interesting? That is like, yeah, as he said, I said 1%. They did 0.1%. As Alex Dasleby said in the chat, a 0.1%. Yeah, excuse me, my math was off. $180 billion. 1% would be 1.8 billion. So 0.1% is 180 million. They went as conservative as you could go. And still, that it was enough. $180 million was enough to move the needle. Bitcoin's price went up. And as he said, like the state of Illinois, so I grew up in Wisconsin and then moved to Illinois. So of course, Illinois only has 50%. Of course, Illinois mismanaged. But think of that. Think about that. And he also talked about the long plays. He said the short-term volatility, yes, but in the long run, Bitcoin keeps going up. Look at since its inception. Look at its inception, what Bitcoin has done over time. Anyone that's bought Bitcoin and held it for 5 years has made money. They've made money. And when you talk about a hedge against inflation, this is a very significant thing.